Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in this video, we're discussing tax saving tips for taking an early withdrawal from your 401k. Now, obviously, it's not ideal to touch your retirement savings, but sometimes your 401k is the only resource you have. So, should you need the cash, you're going to want to withdraw the money in a way that has the least impact on your taxes and your financial future. And Brian, I want to start with early withdrawal rules. I think it's important we're all on the same page. So let's go over those quickly and then we can get to the tax tips.
Before that, I want to make sure it's clear that we're talking about early withdrawals and not hardship withdrawals, because these are completely different things.
Good point.
If you want to know more about them, check out the link in the description below to a video we did specifically on hardship withdrawals.
Got it. Good point. Thank you for that.
Yep. So let's get into the IRS rules for early 401k withdrawals. First off, the IRS requires an automatic withholding of 20% of the 401k early withdrawal for taxes. So if you withdraw $15,000 from your 401k, you may only get $12,000 after the taxes are taken out. Along with these withholding taxes, the IRS will also hit you with a 10% penalty on all funds withdrawn when you file your tax return if you're under the age of 59 and a half. 59 and a half is when the IRS says you can withdraw your money from your 401k and avoid that 10% penalty.
So if you're under the age of 59 and a half, you're looking at 30% taken out.
Automatically.
Yeah.
So, yeah.
And the amount withdrawn is going to be taxed as ordinary income for the year that the money was taken out, correct?
Yes.
And so that means it can push you into a higher tax bracket, which means more taxes.
That's exactly right. Let's say you're under 59 and a half and you pull out 15,000 from your 401k. Now we're up to 30% in taxes and penalties. You're only going to now get 10,500 of the 15,000. You've just lost 30% of your money.
Ouch. And the 20% in taxes are automatically withheld from your employer, correct?
Automatically.
Okay. So in following this example, you're going to have to pay that 10% penalty for withdrawing the 15K from your 401k on your next tax return.
Exactly. And what if you don't have them funds? What are you going to do? Go back to the 401k and borrow again?
Ouch. Well, it happens. It does happen.
It does happen.
Yeah. All right. Let's get to the strategies. What are some strategies that may help you save on taxes?
You know, Michelle, I want to be brutally honest here. There aren't that many ways to save on your taxes if you're taking an early withdrawal. You've got to pay the piper.
Yep. Taxman always comes for his money.
Taxman's always standing out there with his hand held out, right? That said, I would first look to see if you can take advantage of any tax deductions that might lower the tax hit from an early withdrawal. For example, if you got significant medical expenses, the IRS allows you to deduct medical expenses that exceed a certain percentage of your adjusted gross income. So by itemizing your deductions on your tax return, you could potentially offset some of those taxes owed on that early 401k withdrawal.
Right.
And so for the 2024 tax year, single filers and those married filing separately get a $14,600 standard deduction. And married joint filers can deduct $29,200. Your tax rate in the year you withdraw is key. So if you think you'll be in a lower tax bracket this year, it may be beneficial to take your withdrawal now.
So real quick on this, you just single filers can do 14,600 and married filers can do 2920. So if you've taken out, let's go back to that 15%, or excuse me, the 15K. If you do have these, it can offset that 10% you're going to have to pay on your next bill.
It could offset quite a bit of it. So just think of that based on your total income for the year also. And you've got this deduction right here, your standard deduction, whether you're married or single.
Sure.
And that can help offset some of it. So just remember that.
What other deductions can make an impact?
Okay. What if you have capital losses from the sale of investments? You could use them to offset capital gains and reduce your overall tax liability. Okay. So here's the key. If you have capital losses that exceed capital gains, you can use up to $3,000 of those excess losses each year up to the amount of your capital loss. So let's say you have $100,000 in capital losses. You can take $3,000 each year off of your taxes and every year moving forward until you hit that $100,000 limit.
Okay. Is there any Is there any way to offset the 10% IRS early withdrawal penalty for those under 59 and a half?
There are a few exceptions, and these include things like disability, significant medical expenses, higher education expenses, and certain first-time home buyer expenses up to whatever the limits are, which I believe is $10,000.
How are these exceptions different from a hardship withdrawal? Because all those you listed are in a hardship withdrawal.
Well, hardship with dollar amount is only the amount up to the actual hardship.
Okay.
Unlike an early withdrawal where you can take up to whatever your plan allows. Big difference.
Okay. So, all right, that makes perfect sense. Thanks for explaining that. How do you qualify for an exemption then?
Depends on the plan.
Okay.
You have to contact your HR, your plan administrator, and find out what rules are inside your specific plan.
Are there any other ways to lower your tax liability from an early withdrawal, or is that it?
That's about it. Like I said earlier, there are very few options that you have, but that doesn't mean you shouldn't still try to lower your tax liability.
100%. Every little bit helps, correct?
Yes.
If you want to know more about 401k hardship withdrawals, we're going to drop links to 2 different videos that we've done on the topic. They'll be in the description below. One is on hardship taxes, and the other one is just how to qualify for hardship withdrawal, which again is completely different than what we spoke about today.
Yep.
All right, Brian, this has been great. Thank you. If you liked the content of this video, hit that like button. Don't forget to subscribe. And Brian and I put out videos on the daily that help you make better decisions for your financial future. All right, Brian, really appreciate this. Thanks for your honesty today and just laying it out. Also, thanks to everyone who watched.
Thanks, everyone. Have a great day.